Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. Stocks in Asia follow Wall Street lower, with big tech taking a hit as Meta's earnings report spooks investors. Mining giant BHP approaches rival Anglo American with a takeover offer in a move that could spark the biggest shakeup in the industry in a decade. Plus, European earnings ramp up, with Deutsche Bank reporting fixed income trading revenue ahead of estimates. We will speak to top executives from Barclays, BNP Paribas and AstraZeneca this hour.
In the meantime, quick check on these markets here. When you look at the futures picture, it is a negative tone, but you are seeing massive underperformance over in the States. Eurostoxx 50 futures down 0.2%. Again, the tech underperformance not seeping through yet. You're seeing it more than NASDAQ 100 down 1.4%. However, positivity in euro dollar 107.12 is what you're seeing there. And of course, we are on currency intervention watch. Dollar yen 155.68. Markets today starts right now.
Thursday, the 25th of April. Good morning, everybody. Buckle up. It is a busy morning for corporate earnings. We've already had a slew. Net, I would say you've probably got more big misses this morning than big beats, but the game is still being played. Barclays is out over the last couple of minutes. You've got Omer's numbers as well hitting the screens as well. That looks like we can maybe add it to the beat side of the equation.
Yeah, absolutely. Omer's first quarter sales then up by 17%. The estimate was up by 14%. And we've spent a lot of time so far this earnings season talking about how much you could read across from Gucci in China to other parts of the luxury space. Well, maybe there are limitations to that argument.
Absolutely. The idea that the U.S. consumer may be kind of being able to make up that gap, it's the exact flip story at Hermes. You're seeing the Americas revenue coming in a little bit lighter than the estimate. The outperformance is actually Asia. So, Anna, to your point, the exact opposite of what we're seeing in Kering.
OK, as Guy mentioned, lots of earnings stories coming out this morning. AstraZeneca, Unilever, plenty. From the banking sector, we've already had numbers out from BNP Paribas and from Deutsche Bank. Let's focus now on numbers out of Barclays. The first quarter investment banking revenue coming in at £3.33 billion. That is broadly similar to the estimate of £3.35 billion. The net interest income entirely in line with the estimates. Let's dive into a bit more detail, though. I'm very pleased to say that joining us now, CS Venkatakrishnan, the CEO of Barclays. Venkat, a real pleasure to have you with us today. Thank you so much for joining us. We want to talk about net interest margin, want to talk about the investment banking part of the business. I'll go to the net interest margin story first, if I could. Entirely in line with estimates, that number this morning. Yesterday, we saw Lloyds reporting something a little different, under a bit of pressure as consumers shop around for higher rates of interest on savings products. How should we look at net interest margin with all the volatility around rate expectations? What's your sensitivity to the rate environment there?
Well, Anna, thank you very much for having me. And as you say, these results are entirely in line with our expectations and with what we put out on our Investor Day about 10 weeks ago. At that point, we said that we had a target for 2026 returns of 12%, 10% in 24. Our first quarter ROTE is 12.3%, which is entirely in line. Our income numbers are in line, our costs are in line, and our capitalization is in the middle of our range at 13.5% on CET1. As far as net interest income goes, you know, the rates markets have been volatile. There's been a round trip approximately of 90 basis points down, 90 basis points back up in the 10-year gilt in the UK, and roughly the same numbers in the US. And so it is very early. Our numbers are in line with what we said. We've seen deposit growth. We've seen lending growth in mortgages and in credit. And so we're pleased with that. But it's one quarter in a longer journey of 3 years.
Yes, it is. I mean, some of the talk at the margin has been a little bit more on the hawkish side, the higher for longer arguments producing that 90 basis points round trip to the upside most recently, Venkat, as you mentioned. So where does that leave us then? As we go through the rest of the year and we look at what happens to rates, what does that do to net interest margin? Give us a sense of the sensitivity.
Well, I think net interest margin, obviously, when you have higher rates, you have a better lending difference. You pay more in deposits, but you get more in lending. And there's a firmness in the markets. But, you know, rates are very, very volatile. So I would shy away from predicting a number in just the first quarter of the year.
Venkat, good morning. It's Guy. As you say, the rates market is very volatile, yet Q1 FIC revenue looks a little light. Why is that? And why are we seeing big differences beginning to emerge between banks in terms of the way they're performing in that space?
Yeah. So I think, first of all, within the Barclays investment banking revenue complex, as in any quarter, you'll have some ups and downs. When we look at our own FIC business, one part of it, which is one of our strategic areas, securitized products, has done very well. On the rate side in Europe, we're a little weaker. And then on equities, and we're talking from our equities floor here at Barclays, we've done extremely well. So on FIC, I think it's a bit of the complexion of the business, and it's a bit about where the movement has been. But I think it's hard to read into any one bank in any one quarter. You've got to see the trend over a longer time.
OK. Do you think the US FIC environment is more conducive to profitability than the European FIC environment? It's interesting. We're going to be talking to BNP Paribas in just a moment, and I'm kind of interested in the compare and contrast between the way that European banks are performing in that space and US banks are performing in that space.
Yeah, I think, for instance, Barclays, we have a fairly big US presence, as you know. I think what you've seen in the US market is more active positioning. The market is, of course, broader across the full range of credit and includes securitized products. So I think there's a greater and richer opportunity in the product set in the US, which lends itself to greater performance by those with bigger US exposures.
It's Kriti in London. Thank you again for joining us this morning. To offset, though, some of that kind of depression that you were seeing in the FIC area, talk to us a little bit how you're viewing kind of the capital markets, the deal flow as well. Is there enough momentum there or early signs of momentum there to offset some of the pain, perhaps, in the bond business?
Yeah, so I think deal flow and the equity markets themselves have been starting to show some buoyancy. As I said, we are on our equity floor here, and then our own numbers in equities have shown an uptick for this quarter versus the same quarter last year. I think deal flow is increasing. In our own energy business or our sustainability business and the transition business, we've seen 9 deals in the last quarter and a bit. And so I do think that there is a deal flow happening. I think, though, it's very early. You've got to give it a quarter or two to cement.
Is Barclays prepared to capitalize on that when it does ultimately come to fruition, when it does actually see a little bit more momentum? Is Barclays positioned to capitalize on that, given a little bit of an exodus in terms of your bankers, as well as lower advisory fees relative to your American peers? How do you tackle that?
Yeah, well, it has been and it is a very, very important area of focus for us. We want to increase what we do in M&A. We want to increase what we do in equities. We have hired a lot of very talented bankers. We are focused on the energy transition. We are focused across the important sectors of technology and healthcare. And so we absolutely are positioned to capitalize on it. And you should see the results over the coming quarters. It's not something that's won in days, weeks, and months, but over a longer period of time. And we've put the sustained investment and skills behind it, and we will continue to do so.
Can I ask you about M&A within the UK market, Venkat? We've got a bit of M&A taking place. Barclays, you yourselves in the process of acquiring Tesco's retail bank offering. We also have consolidation with Nationwide buying Virgin Money. The building society space, we see consolidation there as well. Is this a sector where we'll see more, and are you going to play more of a role in that?
Well, I think at any time you have an inflection in the interest rate cycle, as we have had, with changing capital models and changing consumer regulation, it stresses business models, and it therefore drives some amount of M&A. I think our own acquisition of Tesco Bank is something that's win-win for Tesco and for us. We were looking to grow our unsecured lending. And I think you will see other institutions look at that. We have been very, very clear. Our plan for growth is predicated on as an organic one. Obviously, in our areas of focus, which are largely UK-centered, our UK Consumer Bank, which has had strong earnings this quarter, our UK Corporate Bank, and our Private Banking and Wealth, if we see some attractive opportunities which are tractable and reasonably integrated, we will look at them. But that's not the focus and thrust of our plan.
And talking about the UK, Venkat, what are you seeing in terms of credit impairments in the UK? Any areas of concern or any areas that are performing stronger than you would have anticipated?
Well, I think the UK continues to show strength in the economy. There are minor tick-ups in unemployment and so on, but in the broad scheme of things, growth is strong, employment is strong, productivity has to grow, but that's a great focus of both sides of the house in the UK. Our credit stats are very, very strong. We continue in the UK to outperform estimates quarter after quarter in a row. And so we feel very strong, we feel good about the strength of the UK consumer and UK credit. And that's part of our growth strategy in UK lending.
Venkat, kind of just picking up on that then. A, do you think this is a country that needs rate cuts right now? Is that your sense? You sound quite positive, if I'm being honest, about what you're seeing in the UK. You use the word strength a lot, so do we need rate cuts? And the second thing is, it is likely we are going to see a change of government. What do you think the change of government implications are for Barclays? And do you think you are looking at a higher tax regime going forward post that election?
Yeah. So, first of all, I think one of the most attractive things about the UK in this year in which there are elections all around the world is that there is relatively little difference in economic policy between Labour and Conservative. So as far as industry goes, as far as the financial sector goes, indeed as far as the economy goes, I think that's a great source of strength because political change, I think, is unlikely to introduce volatility, certainly nowhere compared to what it was 10, 20, 30 years ago in the UK, in differences between the two parties. So I think that's a great strength of the UK, the commitment of both sides to growth, to productivity, and to business.
Yeah.
And so I do feel strongly about the UK, and I feel strongly about the momentum of the country.
Do you think... OK, we'll come on to the rates question in just a second. Do you think, though, that there is a greater likelihood that the financial sector in particular, which has had a raised tax burden of late, even under the current administration, will see that penalty going higher? And do you think if we do see increased taxation in the UK that will be compensated for by lower rates potentially on the monetary side? I'm kind of wondering what the balance looks like.
Yeah. So, well, it's hard to say what the balance looks like because the rate policy comes from one side, which is the Bank of England, and the fiscal policy comes from Treasury. So I think as far as fiscal policy goes in the UK, growth is the most important thing. That is the way that we can fund the future of the economy. And as far as taxation goes, look, I think the governments and the government today and the Labour Party both understand the importance of growth and the importance of balanced taxation. So I'm, again, quite hopeful on the country.
Venkat, let's build on that a little bit. When people talk about how they approach the UK, there seems to be a lot of questions about why the IPO market, specifically in London, isn't catching up to some of the strength that at least you're talking about. Is there some sort of rebound in the London IPO market in the near future? And if not, what does it need to get there?
Yeah, I think that's a very, very good question. I think the equity market in the UK and equity risk culture needs a shot in the arm, to be frank. I think that it's important for companies to list in the UK, especially for life sciences, technology companies, and it needs many things which are slowly coming together. There's a part of it which is regulation. There's a part of it which is equity investment and people buying more stocks, pension funds buying more stocks. And we think that some of the initiatives, for instance, the public flotation of the government share of NatWest should be important aspects of that. And then the entire ecosystem of the UK and innovation in the UK coming to fruition in the IPO market is really important. And Barclays is trying to play a critical and positive role in that. It will take time. It will take time to undo what has, I think, been happening over 20 to 30 years.
Thank you very much. Thank you for your time. We appreciate it. CS Venkatakrishnan, the CEO of Barclays. Coming up, plenty more earnings conversations to come as AstraZeneca reports a beat on core EPS. Don't miss our interview with the CFO of the pharma giant. That's at 7:30 a.m. UK time. Plus, mining giant BHP approaches rival Anglo American with a takeover offer. It is all about copper, a move that could spark the biggest shakeup in the industry in over a decade, could benefit investment bankers, as we've just been talking about, in terms of deal flow. We'll bring you that Bloomberg scoop, the confirmation of that Bloomberg scoop, a little bit later on in the programme. But up next, we'll be back to the bank earnings stories. BNP Paribas fixed income traders trailed the large Wall Street banks in the first quarter. We got some insight into that from Venkat. We'll speak to the CFO of France's biggest bank. That conversation coming up very shortly. Please do get in touch. There's a lot to talk about this morning. IB plus TV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Recovery in the wallet in corporate finance will continue across the year. Q1 was obviously very strong in debt products, so investment grade and a recovery in non-investment grade. We do expect that to continue and hopefully see a further recovery in M&A and equity activity.
James von Moltke there, the Deutsche Bank CFO, speaking to our very own Oliver Crook over in Frankfurt. We want to stick with the bank earnings story and go over to another major European bank. Fixed income traders over at BNP Paribas trailed all of the large Wall Street lenders in the first quarter, taking the shine a little bit off a strong performance in other parts of the investment bank. We're joined now this morning by the CFO, Lars Machenil. Thank you so much, Lars, for joining us this morning. Let's start off with that fixed income revenue numbers. It looks like you're seeing a little bit of weakness. You saw it in Barclays. You've seen it in some of the other banks. Deutsche Bank, the notable exception. Walk us through how you're thinking about FIC revenue, given the exposure to Europe. I can appreciate that puts BNP at a little bit of a disadvantage, given the lower volatility story there. How do you recover?
Yeah, listen, it's not recovery. Basically, the bank is doing fine. If you look at CIB as a whole, let's not forget, we're basically a flow bank. Yeah, we are accompanying the flows. And if you look at the parts of CIB, if you look at global banking, record levels up 6%. If you look at security services, up 7%. Look at equities prime services, up 11%. And so your question is, what's on FIC? And on FIC, basically, we have a very high base a year ago. I remind you that a year ago, given all the uncertainty there was a very high demand in Europe for FIC, and particularly if you look at commodities and currencies. Remember in the energy crisis. And BNP Paribas, we are mainly a European bank. 60% of the revenues of our FIC stems from Europe. And that is way above what you have in the overall banking system. And so we had that high base, which has returned to normal. This is basically what we see. So if you look at the longer term, you clearly see that we are up on market shares. And that is basically the base we will go forward. So our activity with the clients is very solid, and we will continue to ramp up our market shares in all of the domains, including FIC.
Certainly an argument that I'm sure your peers over at Deutsche Bank are watching very closely as well. Talking about ramping up, though, I'm curious about the ramp up in capital market activity in particular, that deal flow that we're talking about. There's early signs that perhaps you are going to see a little bit more deal flow coming up in the next couple of quarters. We just talked to the CEO over at Barclays about that as well. Where does BNP fall in that? Does this actually, is that a bet just on volume, or is that a bet on advisory fees? Where do you stand?
Listen, if you already look at our first quarter, so our capital markets activity is basically lodged in a department we call global banking. And if you look at global banking, as I said, record level, up 6% compared to a year ago. And capital markets is mainly a driver for that. So again, if you compare against a year ago, well, you needed magnifying glasses to see those activities. What you clearly see is now there is a pickup. And if you look at the Eurozone with what is ahead of us, what we anticipate, how we see inflation evolving, what we anticipate from the ECB, you clearly see that there is a positive trend on this.
Lars, good morning. It's Guy. Let's talk about the ECB. The rates market is all over the place. We've expected rate cuts. A lot of those have now been priced out. How much visibility do you have on net interest income going forward? What do you think the margins are going to look like? How easy is it to make a prediction on what those kinds of figures are going to be looking like?
Yeah, there's basically, Guy, if you look at it, there's two things. So the first question is, what is the ECB going to do? And so my read, whatever, I don't have a crystal ball, right? But my read is that you see in the Eurozone, you see inflation tapering off. So I anticipate that the ECB will lower interest rates. That will create a positive momentum. That positive momentum will then trigger growth, which will, and so on. So this is a virtuous circle that is probably going to come. So that is the first thing that we see. And as you know, we at BNP Paribas, we stand to benefit from this environment. And then the question is, what will be the overall environment on the pricing? And so what we see is that several of the banks we are competing with are somewhat in dire straits. And so we anticipate that the overall pricing will basically hold well. So we believe that the anticipation of lowering interest rates in the Eurozone will be a stimulus for a bank like BNP Paribas.
Lars, investors have been buying European banks this year, and it's the best performing sector year to date because there is this big anticipation that we are going to be seeing significant capital returns to investors. Do you think that belief is well founded? Do you think the market is going too far in its expectation? Given the uncertain economic environment that we now live in, do you think that capital return story is actually going to be delivered upon?
Listen, before we look at capital return, let's look at the overall environment. So does one believe that the banking system will continue to do well and basically pick up? And if you look at that, you need to take a geopolitical view. I'll let you guys decide on that. But then you have to look at what is the overall environment, the regulatory environment. So if this one is kind of stabilizing, which is something you see in Europe, you might have some kind of questions of where the US is going. But on Europe, you see some stability on that. And so you could imagine that the banking environment should be well positioned into that. But then the question is, what is the overall position going forward for a bank? And that's where things might be different. So if you are a bank that is positioned in zones and with products and with services that can fuel growth, that will be the case. So my message is, overall, the environment should allow that, but then there should be differences between the levers that banks have to continue their kind of profitability.
Lars, good morning. You said a little earlier on this year that this year's profit would surpass 11.2 billion euros. If there are analysts out there who can't make the numbers work, what do you say off the back of today's numbers to convince them that you can meet those goals?
Listen, not wanting to say anything bad, but we thought when we guided that our result would be higher than that of last year, and that we also said that we would operate at positive jaws and that our cost of risk would remain below 40. We would have assumed mathematically that basically leads to assumptions on what the top line will do. And so what we've done is, if you look at the first quarter results, again, if you look through the exceptional high base a year ago, you'll see that the top line evolved by 3%. And so what we've now added towards our guidance is that basically saying that we are confident that the top line will evolve by at least 2% over the year. So that's basically the kind of elements we now give. We give guidance on the top line, on the cost of risk, and therefore we clocked in a first quarter that basically supports that evolution.
OK, so the first quarter supports the evolution that you previously described in profits.
Yes.
Thanks, Lars. Thanks so much for joining us. Lars Machenil, the BNP Paribas CFO, with us, as he often does, make time for us to talk to us about the earnings stories and the wider banking landscape. But we will turn to another sector after a short break, talking about the drug space coming up as AstraZeneca reports a beat on core EPS. Don't miss our interview with the pharma giant's CFO. That conversation coming up next. They've got an investor day coming up in the next month or so. So a lot of key information and key assumptions, I suppose, will rest on what we hear from that investor day. What insights can we get from the CFO today? Also, US pricing very much in focus. A lot to talk about. We'll return with that conversation shortly. This is Bloomberg.
Morning, folks. Welcome back. About half an hour to go until the start of equity trading here in Europe. You've got a lot to digest. You've got a lot of pieces to put together to try and figure out exactly what's going to be happening here. The picture is quite mixed at the moment. The CAC 40, at least, at the get-go, looks like it's going to be potentially where we're going to see the weakness this morning, though MES numbers look quite strong. But my understanding is they're going to trade fairly kind of flattish at the open. Net, it feels, and this is a very basic assessment, of what we're seeing here this morning. There are probably more misses out there this morning than there are beats. Does that add up to a negative market? One company that is not on the miss side of the ledger this morning and is very much firmly on the beat side of the ledger this morning is AstraZeneca. It is out with numbers. Core EPS comes through at 2.06, the estimate there 1.89. Q1 revenue 12.68, the estimate there 11.82. These are fairly decent beats, and it's worth kind of asking the question about kind of how sustainable some of these numbers are and what happens next with this business. As Anna pointed out just a moment ago, I think it's on May the 21st, we've got an investor day taking place up in Cambridge. I think you can join virtually, but if you want to go up there, I think it'll probably be excellent. Arohana Saran is the CFO of the company and joins us this morning on set. Good morning. Thanks for coming actually to see us on such a busy day, so we really appreciate that. These are good numbers. The market clearly has underestimated what you are going to deliver this quarter. And I'm wondering, therefore, kind of, is everything good? Are there some standouts? It looks like oncology has been very strong. 2 or 3 really key drugs in that space have really performed. Is it consistent across the business? Are there areas you need to focus on? Or is this a business that is firing on all cylinders kind of across the piece?
I think the revenue and EPS that you see is really performance across the board. So this was the first quarter that both our biopharma business and our oncology business exceeded $5 billion in revenue. And our rare disease business was over $2 billion in revenue. And when you look at the growth rates, oncology growing at 26%, cardiovascular medicines business growing at 23%, respiratory business growing at 17%, and rare disease at 16%. So I think one of the key strengths of AstraZeneca is this diversity of portfolio. So it's not 1 or 2 medicines that's really driving the growth. It's a very broad base of 12-plus blockbuster medicines that's driving the growth. If you look from a geographic standpoint as well, it's, again, emerging markets have been growing really strong. The U.S. is really strong. Europe is really strong. So it's really across the board that we see the strength in the performance. But what's really exciting, you mentioned the investor event, is the portfolio that we have. So it's really the pipeline and how that pipeline is coming to maturity, and we're continuing to invest in that pipeline. I think that's what's really exciting.
OK, so everything's doing quite well. The investor day is going to be worth turning up for. All good so far. What you are doing is also a series of bolt-on acquisitions. So again, I come back to the business. I look at kind of where you're performing, and you're telling me you're performing really well across the board. If you think about further bolt-on acquisitions, therefore, are you agnostic as to which area of the business you would be bolting those bolt-ons to, or are there specific areas you think that actually could do with bulking up with those bolt-ons?
So we've done multiple bolt-ons, as you mentioned, over the last 18 months. We've spent about $6.7 billion in capital across multiple acquisitions and BD transactions. We've defined our core therapeutic areas as oncology, cardiovascular medicines, respiratory, and rare diseases. So those are the core areas within which we will look to license products or add products.
So this process carries on?
I think I'm not sure it carries on. I think we've been very active in the last 6 to 8 months, probably 12 months. But before that, for the last 2 or 3 years, we weren't really active. So I think it's maybe the nature of the market and being able to find certain opportunities, and also how they strategically fit with our vision. So, for example, we acquired a company called Gracell, which is in the cell therapy space. And cell therapy is a technology that is starting to come to maturity, and probably will have implications not only in blood cancers, which is where it's now being used, but also solid tumors as well as autoimmune diseases. So I think as technologies mature, we look at where are things which, when we can think of the next 10 years and the 10 years beyond that, where we invest.
Aradhana, good morning. I want to ask about the margin story at AstraZeneca, because clearly these numbers will please the market, and you've talked about the growth rates that you're seeing. A lot of this growth, a lot of this pipeline, though, needs quite a lot of R&D and needs a lot of spending on it, and there do seem to be some investors a bit concerned about how you keep your margins. What can you tell us about how you protect those margins? What's front of mind?
Yeah, so when we look at margins, we really think about, are we getting operating leverage in the business? So is our revenue growth higher than our expense growth? And that is clearly the case. So, for example, this quarter, we saw a 19% growth in revenue and a 13% growth in SG&A. Obviously, you need to invest to drive that top line. We also invest about 22% of our revenue in R&D. So when you think of the breadth of our portfolio, 120, phase 3, phase 2 studies, late-stage studies, that requires obviously a lot of capital. And so we do invest in R&D, and not everything will work for sure, because it is science, but we're investing for, again, the next 10 years. So this growth continues not just this quarter or next quarter, but for the very long term.
OK, and of course pricing will be important in what you're able to turn those products into. Over in the United States, you had a lawsuit against the Inflation Reduction Act's drug pricing program, but that was dismissed. What's next for you on US pricing?
Pricing is clearly an important factor, and I think there are many elements when you think about pricing. First and foremost, price is very correlated to value. So when we think of innovative drugs, you have to bring true innovation to the market, not just incremental innovation to the market. And that real innovation will allow for, to justify the prices that we look for. Secondly, we're very focused on access. And the great thing about the Inflation Reduction Act that is in the U.S. is actually it provides access to a much broader set of patients. And also that allows for patients to stay on drug longer and reduces, in some ways, the amount of free drug that we provide, because now you have broader access as a result of the limitations on Part D. So I think we'll continue to work with, with governments across the globe, but both those elements, bringing value through innovation as well as access, are important to us.
Sticking with the U.S. legislation theme as well, and I love that you brought up the access point of it. There's another piece of legislation coming through in the House and Senate, the Biosecure Act, which I'm sure you're familiar with. For a global audience, it basically means that it kind of puts prohibitions on contracts with companies headquartered in other jurisdictions, like China, for example, citing national security. AstraZeneca has about a 12% exposure to China, about a 42% exposure to the U.S. Do you see a trade-off there? Is there one in the future that may impede your ability to bring that access story to China?
Yeah, we do have a large business in China, a large commercial business in China, and we also are doing research and innovation in China. Relating to the Biosecure Act, I think when we look at how we supply drugs, and our supply chains are actually very resilient. And that was proven out during the pandemic, where not only did we supply billions of doses for the pandemic, but we also did not miss a single dose of our own drugs, whether it was cancer drugs or heart disease drugs and so forth. So we have built very resilient supply chains, and we have a very global network, both internal as well as with partners. So our ability to manage supply from different manufacturing sites it gives us a lot of flexibility. That being said, we obviously will comply with whatever regulations there are, but I think we have very resilient supply chain and probably will not have much impact as a result.
So very quickly here, does comply mean limiting the exposure with China if the U.S. imposes that?
So the Biosecure Act is more focused on manufacturing supply itself, where we already have our own manufacturing in different places. But, we have a commercial business and a research business there.
All right. Aradhana Sarin, the CFO of AstraZeneca, we thank you so much for bringing the headlines for us on the AstraZeneca earnings. In the meantime, we are getting some numbers coming out of BHP. We know that's a potential acquisition offer being made for Anglo here. BHP Group saying that Anglo would receive a 0.7097 BHP shares for each share of Anglo, and that the offer would value the company at about £31.1 billion. We're going to bring you more analysis, of course, after the break. In the meantime, stick with us. This is Bloomberg.
Welcome back to Markets Today. We have 17 minutes to go until the start of cash equities trading. There's so many earnings stories to factor in here. The net result of all of them is that the stock 600 perhaps won't move anywhere in a hurry, but we could be flat, but some really interesting moves expected at the stock level. Let's go macro, though, and think about other themes in these markets. We're joined now by Markets Live Executive Editor Mark Cudmore to give us 2 minutes on the markets. And Mark, let's start with the BOJ. We're looking ahead to the BOJ tomorrow. We, of course, have been through 155. We're still through 155 on dollar yen. What's the game plan? What are you hearing people saying is the game plan as you head into tomorrow?
So I think the vast majority of the macro discretionary market are not short yen and are looking for intervention tomorrow, and there are a lot of the market is buying short-dated downside dollar yen puts on this idea that, hey, we might get a US data surprise tonight. US GDP tonight might come in strong. Atlanta GDP now is reading 2.7% for a 2.5% expectations, so we might get a hot print there. Higher yields, higher dollar yen into BOJ. BOJ obviously disappoints tomorrow, and then what we see is the MOF has to come in and Friday afternoon to intervene when it will have max power, and we've got precedent for that, of course, happening before only a couple of years ago, and therefore dollar yen will come much lower. But ultimately, most of the macro discretionary market probably wants to sell yen again if we do get that intervention. For myself, all this narrative makes sense, except I'm slightly worried we may not even get the intervention. I think that it's very, very hard for the MOF to come in when the US narrative has not yet turned. And so I think that's where there might be disappointment in that narrative.
OK, there could be disappointment there then. What about the chances that they don't do intervention but they do a rate hike instead?
Look, I think the risk-reward is to bet on a hawkish surprise because there's nothing priced. And, you know, look, our colleague Simon Flint has done this excellent analysis saying, look, they really should be hiking now by everything kind of all the analytical thinking, all the economic thinking. The problem is everyone tells me knows the BOJ is it's too political. Without the communication, without the guidance, they cannot hike tomorrow. So it's likely that, you know, they will probably disappoint on those few people betting on a rate hike. And really what we're going to get on the guidance of whether it's a hawkish or dovish surprise will depend on their forecast. It'll depend on their long-term inflation forecast, what level they come in at. Do they show sustainable inflation, or do they show they're still worried that they need to provide more easing to this economy?
Mark, thanks very much. Bloomberg Markets Live Executive Editor Mark Cudmore with the latest on these markets. Remember, you can get more from the team, the whole MLIV team available to you. That's the function MLIV Go on the Bloomberg terminal. Let's talk tech. Meta plunged 15% post-market after the company's second quarter sales forecast missed estimates. The tech giant also announcing plans to spend billions more than expected on AI development. CEO Mark Zuckerberg touched on this in the earnings call.
As we're scaling CapEx and energy expenses for AI, we'll continue focusing on operating the rest of our company efficiently, but realistically, even with shifting many of our existing resources to focus on AI, we'll still grow our investment envelope meaningfully before we make much revenue from some of these new products.
Robert Lee is a senior analyst for Bloomberg Intelligence and joins us now. Robert, the markets took a dim view of what we heard here. What do you think was driving that? What was I've seen three things listed as possibly driving the negativity. What stood out to you?
Yeah, well, I was going to say what a difference a quarter makes. You think last set of results, there was all the euphoria on their share buybacks, on dividends, and obviously the benefit they were gaining from the earlier cost cuts. But I think, you know, what we heard last night is perhaps reality bites, that whilst most people agree, you know, generative AI and AI in general is an interesting secular trend that's going to last many, many years to come, the reality is the software companies are a bit caught in the middle at the moment because they're spending billions and even tens of billions out on the CapEx side at a time when their monetization efforts are at a very early stage and a very immature stage. So they're nowhere near covering this. They're nowhere near breaking even, yet breaking into profit on their AI side. And one key attribute, positive attribute, the Magnificent Seven has, including Meta, is its free cash flow generation. So, again, there are concerns in the market that the very heavy and increasing CapEx burden is beginning to eat into their free cash flow, again, at a time when they're not really properly monetizing it at the moment.
So the year of savings feels like it's over, so that's in the rearview mirror. When we remember what is happening right now, do you think we'll look back on this moment as peak AI?
Wow, yes. Setting myself up for a fall here. I think we are, we're potentially at that point. This will go down in the blooper videos in years to come. But yeah, I mean, the tech sector is notorious for hype cycles, isn't it? We've had all the hype around Bitcoin and the initial wave of euphoria on that, and with Meta and Metaverse. Is AI going to follow a similar cycle? I think, it comes down to human behavior, human psychology, and the way that markets work. This sort of trade ahead, price things in ahead. But I think, again, the reality is it's going to be a bit of a struggle for all the companies, not just Meta, to properly monetize this. It's a multi-quarter, multi-year challenge for them. Yes, I would agree. Arguably, the market has got a bit ahead, given the multiples these stocks have been trading on recently.
Well, Robert, it just feels like even though every company is investing in a really big way, Meta has done this and thrown their weight behind so many different projects with very little return. But compared to, say, the likes of Alphabet and Microsoft, where they have actually been able to gain a little bit more of that market share, walk us through the numbers that matter when those two companies report later today.
Yeah, key difference with Alphabet or Google and Microsoft is they've got sizable cloud computing businesses, which are both large in scale and highly cash generative. So you've got this cash cow business. Well, I call it cash cow. They're growth businesses as well, underpinning their earnings, and Meta really doesn't have that. So that is one key difference between them. But I would say in terms of internet stocks, not just in the US, but globally, there are three things that matter. One is the AI monetization, and we've just talked about that. The second, though, is the reality is advertising, which is a very cyclical business, again, underpins their earnings. So in a slowing economic environment, we need to watch that closely, and we'll see what Alphabet says tonight. And then I think the third area to focus on is really shareholder returns. So again, back in last quarter, we saw share buybacks or enhanced share buybacks announced. There are some questions as to whether Google could announce a new dividend tonight, so we'll have to wait and see. So I think enhanced shareholder returns, again, is an area the market will definitely be focused on.
All right, shareholder returns, cloud market share, and of course that business investment. Robert Lee, senior analyst for Bloomberg Intelligence, we thank you so much for walking us through that. And I should mention those results, by the way, pressuring NASDAQ 100 futures this morning, really taking a beating. Let's stick with the equity picture and get our stocks to watch. Joe Easton from our equities team is standing by. Joe?
Morning, Kriti. So we've got potentially huge M&A news in the UK here as Anglo American receives a takeover proposal from BHP over in Australia. Now, we're just getting a potential price. It could be around £31.1 billion. Now, the last time we had a deal of a similar size was when Sky was taken over by Comcast back in 2018, just telling us that we don't get many deals as big as this in the UK. In terms of why they're doing it, it would give BHP a 10% share of the global copper supply market and also more growth over in other metals like nickel and also some iron ore as well. The thing with the deal is that Anglo is also the majority holder of De Beers and a couple of South American units as well. South African units, sorry. And in terms of BHP wanting this deal to go through, they say they would have to sell those units in order for them to complete the deal. Now, in terms of the valuations, which is why they've been attracted to the stock, we can see UK miners trade at a very big discount to the global mining sector. We can see trading on around 12 times price earnings versus 16 for the broader global market. That has spurred some worries that a couple of the big commodities firms could actually delist in London. So this is adding to those concerns this morning. Here's the chart in terms of some other peers, Glencore, Anglo and Rio as well, not having a great one-year period. The thing is, could this then shine the light on other firms that could then become targets, or could there even be rival bids for Anglo? That's what some analysts are talking about today, but massive news in terms of UK M&A. Then, in terms of the chips, we've got a sales warning. This one coming from ST Micro. Sales for the year could be as low as $15 billion. The market was looking for 16. It is a big slowdown in terms of the auto chip space, according to the company. And interestingly, it comes just a day after ST Micro had a massive gain following some reports from ASMI, Texas Instruments over in the US. And it wasn't just that stock that gained. We saw gains across the chip space yesterday. for this could potentially be negative. 18 analysts have buy ratings on ST Micro. And another point to note is we've also got a bit of a warning out today from BE Semi over in Amsterdam. That one is giving us a negative read as well, seeing some sharp calls lower on that. There's the buy ratings on ST Micro, 18 on that one. Finally, Nestle getting a negative reaction today. They are seeing some weakness over in North America, according to analysts. Analysts over at Jefferies pointing to a frozen food decline miss and also weakness in some of the coffee and also the pet care markets. Here's the quote from Jefferies, calling that a very weak report, citing the consumer demand, particularly in North America. It has had a bad 1 year already, and potentially we could see that continuing today. There it is, over 1 year. Nestle down 19% in Switzerland. Potentially that could continue. Keep an eye on Nestle this morning.
Joe, thanks very much indeed. Unilever's probably worth throwing in here as well, which I think is an interesting set of numbers too. Joe's bringing up Nestle. Verve certainly having a very tough morning this morning. But the Unilever numbers look really strong, and there's talk of kind of them being so strong that actually you could see a series of re-ratings on that stock to the upside.
Okay.
So very big compare and contrast within that space.
Yeah, absolutely. And another thing Joe pointed out, I think really interesting, talking about weakness in the North American consumer. I saw that in the Pernod numbers as well, their organic sales numbers dropping and dropping more than expected in that North American market.
It's so funny you guys talking about the numbers. The headline for me was Ben & Jerry's said that the sale would not affect their business, and that to me is what I really latched onto from the consumer sector. We're going to dive into more ice cream and, of course, all the corporate stories coming up. It is the market open. Futures pointing just marginally higher. Stick with us. This is Bloomberg.
Thursday the 25th, 2 minutes to go until the start of equity trading here in Europe. I have got a list of stocks that are going to move this morning as long as my arm. It is going to be a very busy morning. Net, what is it going to produce at the moment? Futures kind of pointing us to a actually fairly flattish open, but maybe as we start to digest some of these figures, we'll get a little bit more clarity. There's also M&A we need to talk about as well this morning. Is this the precursor to a big round of consolidation within the mining space as we see potentially BHP and Anglo getting together? Not a lot of premium in there, though.
Yeah, absolutely. Not a lot of premium. This feels very 15 years ago, doesn't it? These big deals in the mining sector. And after that, they didn't deliver, in some cases, didn't deliver what people thought they might. And then the sector went through a whole period of, we won't do that anymore. We'll return cash to shareholders. Well, now the pursuit of copper gives us something different to talk about.
Well, I think the copper story is so interesting because in the short term, it's a really kind of scary place to be right now with all the shortages. We, of course, know Anglo American downgraded their forecasts or production forecasts. I think this was Monday as well. On top of that, they're also downgrading their De Beers division as well. They're saying that they're starting to see shortages in that piece as well. But in the long term, this kind of energy transition creates this underpinning for the copper story. So is this a short-term supply story or a longer-term bet?
I think this is a management mess-up story.
Oh, okay.
Anglo have, to your point, have had a series of downgrades in terms of what they've been able to deliver. That has pushed the share price lower. They're listed in London. Anglo is now looking very cheap. And what you say about the copper is right, but Anglo has got very cheap relative to the rest of the space. And I'm just wondering, therefore, this is a kind of isolated opportunity.
Yeah, we want to see where this one goes at the open. Not a huge amount of premium, as we said, so we'll probably get some upside, but how much? Will others come in to bid for this asset? We'll see if there's any other interest here. So many others reporting today, as Guy said. I wonder if these markets are just a little stunned in the face of so many corporate earnings stories, plus the tech themes of yesterday coming out of the United States, plus the M&A. There's a lot to deal with. European equity markets then opening. The FTSE 100 is up by 0.2%, so we see a little bit of a move higher there. The DAX is flat so far, so net so far moving nowhere on the stock 600, but in its early days, we'll wait for some movement. We haven't talked about all the stocks reporting this morning. It's just not possible. I was drawn to the BASF news earlier on as well, because chemicals, I know, Guy, we often talk about how you want to keep across that story. The numbers beating estimates, it seems, but saying that they can't confirm turnaround in the chemicals industry just yet. You wonder where that sector goes during this earnings story.
The numbers from Wacker are also quite good, but they have beaten expectations, but they are still, if you take a look and widen the lens, they're not great numbers. So that kind of relative to where we thought they would be, yes, they look good. But actually, in the kind of the big scheme of things, as you say, the turnaround in maybe that sector has yet to appear. Nestle is getting hit pretty hard this morning. ASML is down pretty hard as well. I wonder if that's a read across from STM and BE. So that's coming into that space. You are seeing the kind of the tech sector broadly across Europe under pressure. The real standout story, AstraZeneca. AstraZeneca is lifting the FTSE 100 this morning. It is the biggest points gain on the Stock 600. It's up by 5.5%, nearly 6% this morning. Unilever hot on its heels.
Barclays as well, higher by about 2.2% this morning. We had, of course, had Venkat earlier on the show. We are watching BHP and Anglo as well. It doesn't look like Anglo is open just yet, but BHP is under some pressure this morning. So, of course, we're going to watch and see if it's that class of M&A trade, how Anglo responds to it, and how close you get to that premium.
It does seem as if all of these themes are adding up to a bit of London outperformance today. There's AstraZeneca lifting the drug sector. There's Barclays with a bit more US exposure helping the trading side. That helps it stand out on the banking space, maybe. The Unilever numbers, the M&A in the mining space, all of these themes coming together in London, and we are up by 0.6% on the FTSE 100, whereas the rest of Europe does look a little flatter.
In terms of the luxury sector, it looks like the MS numbers have been well received. We'll talk about these in a moment. That is giving a little bit of a boost to the likes of LVMH this morning. It's interesting to see L'Oreal also kind of picking up on the back of that. The other bank I would just mention is Sabadell. That looks like it's had a fairly solid set of numbers. That stock is up by over 7%. So some mixed performances coming through in the banking space this morning, but broadly, in aggregate, probably a little bit more positive there. So some real differences emerging in terms of what we're seeing here. Chips are definitely down. Tech is under pressure this morning. You've got some kind of real divergence within the consumer space between Unilever and Nestle. Nestle's down 3.2%. That's the biggest drag in Europe. Unilever up by 3.86. That's the second biggest gainer in terms of points here in Europe.
Still waiting for Anglo American to open up, even without that, basic resources is the best performing sector in Europe today. So we'll see where that one goes. But it's mostly the paper companies at the moment.
Certainly something to watch. I'm going to bring it back to what Guy was talking about with the banks, because you're seeing some real divergence in terms of how, say, for example, Deutsche Bank versus BNP, for example, has actually approached their fixed income business. We actually asked the CEO of Barclays as well how the rate volatility is affecting their bottom line. Take a listen to what he had to say.
As far as net interest income goes, you know, the rates markets have been volatile. There's been a round trip approximately of 90 basis points down, 90 basis points back up in the 10-year gilt in the UK, and roughly the same numbers in the US. And so it is very early. Our numbers are in line with what we said. We've seen deposit growth. We've seen lending growth in mortgages and in credit. And so we're pleased with that. But it's one quarter in a longer journey of 3 years.
The CEO of Barclays, they're talking to us a little bit about that rate volatility. Let's get more on that. Tom Metcalf, our EMEA Finance Investing Managing Editor, joins us this morning. The key theme seems to be this rate story, weakness in FICC results, except for Deutsche Bank. Is this a one-off?
Yeah, I think it's really interesting as you look across between Deutsche and Barclays. Like Deutsche Bank's fixed rate traders did very, very well. I think up something like 7%. As Venkat was just saying there, it was sort of a bit of a middling quarter, I suppose, for the rates traders at Barclays. But for me, the interesting thing is you look at the Barclays share price, up a couple of percent, as you were saying. And I think that speaks to, you know, what investors are looking out for Barclays. You know, the investment bank's obviously a big piece of this, but it's not the be-all and end-all. And they're probably pretty happy with what, as Venkat was saying, looks like a delivery on those expectations they set out at that strategy update.
What are the differences between the European banks that are obvious from this set of numbers? Can I aggregate them together? This is a sector that's done really well so far this year. It's the big outperforming sector so far. Yeah. But where's the nuance within this set of numbers, from Sabadell to Barclays to what we're seeing this morning from BNP to Deutsche? Where does the... If I'm stock picking within the sector, what am I looking for this morning to determine kind of how I see the differences between the banks?
Well, I think in some ways you just look at the domestic markets, right? Like, you know, a Barclays versus a Deutsche Bank, and ultimately maybe the difference there is your view on each of those countries. And that's the fascinating thing is, you know, within Europe there is such a divergence sometimes between the banks. Like, you know, as I say, Deutsche Bank probably will be going home very merry, but they've got this particular strategy they're trying to execute on.
House bank, yeah.
Yeah, exactly. So it's always the way, I guess, in Europe.
So it's geography rather than business model that is determining kind of how the market sees these stocks.
I think sometimes, because obviously NIM is such a big part of what everyone's thinking about.
Right.
So, yeah, and that's the tricky thing with an investment bank. You know, trying to sort of value that as a shareholder is really hard because, you know, it's a bit of a black box. Why did Deutsche Bank do so well this quarter compared to Barclays? You don't know. And as Venkat was saying, it's very difficult on a quarter-by-quarter basis to judge an investment bank. It's sort of that longer-term view. But obviously, when you see the ups and downs per quarter, it's easy to get caught up in that, which is why you have that pressure on Barclays to be like, we actually don't want you to be viewed as an investment bank heavy institution. We really want that risk-weighted assets to come down.
He could be pleased then with the amount of time we spent talking about net interest margin, and we heard him there referencing the round trip we've been on in UK rates and how that might play out for the business. It's interesting to think about, we heard from Lloyds yesterday, which their story was one of NIM coming under pressure because customers were shopping around and looking for better deals on their savings. And, the longer we're in a higher rates environment, the more that might happen, one assumes.
Yeah, exactly. And, it comes down on the retail side, just execution on that retail side of things, which is, often doesn't get the headlines, but can you deliver that customer experience? Can you sort of stand out from the pack without necessarily just relying on a higher interest rate to bring people in? But, yeah, I mean, that is going to be the big thing in this rate environment is how much of that margin can the bank sustain? And also, who is kind of getting more of a market share than others?
Deals also in focus this morning, something we also talked to Venkat about, something the bankers might be pleased to see with this big mining deal perhaps going through. Tom, thank you very much. Thanks for joining us. Tom Metcalf there with the latest on the banking sector. And talking of those deals, Anglo American shares then on the rise this morning, jumping 11% out of the gates this morning, reflecting that BHP offer that we've seen for the business, jumping to 24.60. So perhaps a little bit of execution risk being priced in there as the offer around 25.08.
I'm interested to see Hermes is a little softer this morning. It's kind of the bottom end of the CAC, not bottom end of the CAC, but it's in terms of points, the third leading loss in terms of what we're seeing from the luxury sector. It's interesting that other names are actually doing slightly better. In terms of what the company has come out, actually, the sales story in China doesn't look quite so bad. It does look as if there maybe has been a little bit of trading down, but it's also talking about the fact that it's not planning further price hikes for the rest of 2024, which maybe says something about how maybe the market is evolving here. How should we be reading this? Well, let's get a take from our luxury correspondent, Angelina Rasquer, who joins us from Paris. Talk me through what is happening. The top-line numbers, the sales line, the revenue line, looks really strong. The market's taking a more cautious approach. So why are we seeing the cautious approach when we've seen such a strong top line here?
Hi, Guy. Yes, indeed. I mean, if you look at all the geographies, they grew by double digits in all the regions. And crucially, in the Asia-Pacific, excluding Japan, they grew by 14%. However, the CFO, in a call with reporters, he said that traffic was a little bit softer after the Chinese New Year, so that was in March. But he said that this softer traffic was compensated by basically higher average baskets. So the customers would typically have maybe purchased more affordable products like silk scarves or beauty and perfume weren't so present. However, they seem to have done really well with customers who were buying more expensive items, leather goods, ready to wear, and jewelry. So that compensated potentially a softer demand in the sort of more entry-level categories there.
And talk to us a bit more about China then, because we spent a lot of time over recent weeks talking about the weakness of Gucci at Kering and their struggles in China. What's the difference in the stories here?
I mean, China has been a tricky market so far this year, and it's really we see a divergence, a polarization between the more exclusive brands and the less so, and that's what the Kering CFO told us this week. She says that the Gucci, the label, unfortunately is located in the middle, so it's not benefiting from this polarization in the market. And on the other side, you have a label like Hermes, which is, at the top of the luxury pyramid, maybe, up there with Rolex, and they have this supply constrained model. So that's what we're seeing right now. That those who control their their supply, and therefore their pricing are in a better position than perhaps brands like Gucci, who are perceived to be more in the middle.
Don't want to be in the middle. Angelina, thank you very much indeed. Angelina Rasque joining us on what we've seen out of Hermes this morning. Let's talk about what we're seeing in the core six this morning. Some divergence. It's really interesting. You've had a series of numbers out this morning. Look at Schneider doing very well as the market marks that stock up by over 1%. Look at Nestle. Nestle's getting hit hard in Verve this morning. ASML is also coming under weakness. There's chip weakness this morning more broadly. Novo also showing signs of weakness. LVMH turning around a little bit. So LVMH now a little softer, down by 0.4%. Schneider's an interesting story, and the numbers this morning may be confirming its place in the kind of the AI narrative as well. There are many stocks this morning that you want to be paying attention to. I don't know how Joe Easton's whittling it down, but he has done, or maybe he's just going to take the rest of the show and kind of talk about all the names. Joe, what do you got?
So it's going to be a tough one, Guy, but we've got to start with Anglo American because that move there, 13%. It's a huge move, the biggest move we've got today. As Anna mentioned earlier, though, it is trading below the potential offer price. Now, the other thing to note is there's a good note from BI this morning, so there would be antitrust concerns around this, given these two copper giants potentially merging. So that bid coming from BHP overnight, that prelim bid, we've actually brought up the secondary listing of BHP in London. The main listing is on Australia, but we can see that declining 3.7% at the moment. But the big move is Anglo American, up 13%. Not seeing a huge read across in the peers at the moment, but we're keeping an eye. Could there be a rival bid? Could it then shine the light on some lower valuations of these UK miners, which really are much cheaper than their global peers at the moment? Then we're going to move over to chips, because it is a nasty day over there. ST Micro coming down 4%, BE Semi down 6% as well, and all the peers moving lower. Infineon, ASML and ASMI as well, that one down 1%. ST Micro and BE Semi both giving sales warnings on the same day. ST Micro mostly related to the auto space, auto chips, EVs, that kind of thing. BE Semi is a chip manufacturing firm. These really coming out of the blue and weighing on the tech space this morning. We're going to look, though, at a couple of those consumer health stocks that we've got. So we've got Unilever. Those ones are rising around 4% at the moment. All the focus is on the ice cream demerger, potential IPO of that. Will that go? Will it be London? Will it be Amsterdam? But for the moment, the sales looking pretty strong across the space. Nestle, though, the big decline, and North American consumers not buying enough, potentially not buying enough Nespresso, all the other products from them as well. It does look like North America is the weak one over there. And we've got another drinks warning. This one, again, is Pernod Ricard warning on sales. This is related mostly to their China sales in cognac. However, we have had a number of warnings out of those recently, including Diageo, Remy, all of those peers. It's potentially that price in only down 1%. But take a look at AstraZeneca, up 5%. A big move for that stock. The oncology powerhouse here in the UK continuing to push on, showing strength in their cancer drugs this morning. And that is a big mover in terms of that one. We'll just flip over and look at the banks. Was expecting to see some volatility in the Spanish ones, given potentially Pedro Sanchez looking to maybe resign. That breaking news last night. But the other thing is we had strong numbers out of Banco Sabadell last night, and they are this morning as well. Some analysts saying that potentially the net interest margins over there are better than expected at the moment. Barclays getting a decent gain following strength in their trading business, but the weak one is Deutsche Bank, down 2.5%. Analysts are saying the capital and also the NIMs, the net interest margins, potentially not as strong as expected. Not too much movement in BNP, little gain for that one in Paris. Deutsche Bank, though, standing out, down 2.5% over in Germany, following that weak capital and net interest margins from the German lender.
All right, Joe Easton from our equities team, we thank you so much for walking us through those crucial stories. Coming up, we continue the market conversation with LGIM's Chief Investment Officer, Sonia Loud. That conversation next. This is Bloomberg.
This is more of a fundamentals play, because you look at the balance sheets, the profit statements of these companies. They are attractive companies. They should, you probably don't want to own 30% of them in your index, right? But owning all of them, I think, is a good idea.
That's Kuei Wen, CIO for Equity Strategies at Research Affiliates, speaking to this programme just yesterday, talking about tech names, big tech names, and the extent to which you want exposure to those. Let's get another view. Sonia Loud joins us, CIO of Legal and General Investment Management, with us on set this morning. Sonia, very good morning. So we'll get to some of the European earnings themes, if you like, in a bit. But in terms of the stateside mood, of course, we had real weakness after hours in the Meta numbers. I see the Nasdaq futures down by 1.2% right now. So it seems as if that's going to be something of a theme as we work through the day. There are specifics around one business, but broadly speaking, your thoughts on the tech earnings story that we've had so far?
I probably would phrase it slightly differently, not just on tech earnings, but just taking a step back to make sure that we are, capturing the signal versus the noise. Because on a day like this, you can get drowned in the headlines and the earnings reactions.
Yes, that's where we are.
And so it's always important to understand what's been the run-up to the earnings season, what's been the expectation built into the earnings season. And it's very clear for tech stocks in particular. Look on the one-year performance. It's been a huge run-up based, obviously, on the wonderful expectation how AI will change the business environment, will obviously drive tech earnings. And don't get me wrong, the earnings profile has been strong. But if you then look at the valuation level, you see that we've probably gone quite a bit ahead on extrapolating that this will be a very smooth line going forward and that there's no bump in the road. And I think we're just hitting a little bit of a reality check. This doesn't take away the excitement around the potential for going forward, but it's probably valuation coming back to a more realistic pathway forward.
OK, so we're getting a reality check on tech over in the United States. Here in Europe, we've got so many themes going on with the earnings stories, as you mentioned. So let's take one at a time, I suppose. I was looking at numbers out of the chemical sector. Big players there saying you can't call that we've turned a corner on big, chemicals in the chemical sector just yet. What are you looking for from that kind of sector? Because it's often watched as really crucial to telling us about the broader industry. But a lot of the growth out of Europe, any recovery has been in services, not manufacturing of late. So what signal do you get there?
Yes, and this is where you really want to have the reality check with the fundamentals. Where are we in terms of our expectation for the economic growth? You rightly pointed out we've had more positive news from the services sector rather than manufacturing. This was reconfirmed with a PMI story in Europe yesterday, and so not necessarily surprising that the news flow out of companies would match this. Now, for the large global manufacturing companies and chemicals in particular, you would look towards China as well. And again, looking at fundamentals, what's the story there? And as such, you have to look really regionally and fundamentally what's driving the relevant pieces of the jigsaw.
Sonia, is it too early to price in election risk in the U.S.?
We are always very mindful to price in any election risk because at the end of the day, you will have noise, you will have volatility, you will have loads of emotive headlines. That's a given. But at the end of the day, for investors, what is it really that influences the trajectory of growth, inflation, monetary policy? Because that really gives you the trajectory that you really should focus on. And I don't think if you really look back in history, ignore the noise. There will be lots on the day and clearly in the run-up. But what really is influencing is more the themes. We would look at fiscal in particular because this clearly is an area that has helped the U.S. economy a lot over the past year or two. And the question really is how much wiggle room is there? How much can the two parties and hence the president do after the election?
So you say you price that in. What does price that in actually look like? Is there a specific asset you're watching?
Yeah, of course, you would definitely watch the long end of the curve, right? Because if you consider fiscal sustainability and where we are, where the fiscal deficit right now is, you look at some of the expectations, some of the headlines, and we haven't got all the details yet, but you will expect that the market will take note. There's no term premium whatsoever right now, so you have to wonder whether there is a steepening of the curve in the run-up and potentially afterwards, simply because of the dynamics in the fiscal policy.
The FTSE 100 is trying to catch up with its peers. It started. Does it carry on? Is it something that's sustainable? What gets it there?
I would look at the individual companies rather than the FTSE. We know that, yes, we look at it from a country backdrop, but at the end of the day, you know it as well as I. This is the individual companies, their positioning globally that drives the earnings, and I think today's news really, really supports.
Well, let's talk about today's news. Is it a reflection of what's happening at Anglo? Is it a reflection of cheap valuations in London? Is this something that we could see replicated? How many companies could leave? How many companies could be taken over?
if you just look at the stories today, it's clearly strength of earnings and a takeover situation.
Astra looks really strong.
But Astra is a global company. The strength of their portfolio is obviously what's driving this, and their customer base is global. And as such, you know, this is not related to the UK fundamentals. And that's been a story we've had for a long period of time, right? The attractiveness of a marketplace is a set of input factors, and a company will always look at all the factors before deciding whether this is the best location for them to set up headquarters and to strive. And clearly, a company like Astra, you know, with a global customer base, seems to be striving here. But that has to be the ambition, that you have the best backdrop to enable companies to do exactly this.
Yeah, and that's one CEO who's usually quite vocal about what he wants to see in terms of regulatory backdrop and tax and all the rest. I mean, M&A, another big theme in London today within the mining sector. Those with long memories will remember we've been through big waves of M&A 10, 15 years ago in the mining sector. And the lesson from that was investors said, no, we don't want you to do that anymore. We want you to stop doing that. We want you to throw off cash. Now, are we ready? Are investors ready to go back to another period of M&A in the mining space?
I don't think those episodes are necessarily comparable because the narrative has changed completely, right? And we know that the rationale for why we might see the approach today has very much to do with the way how metals and mining are used, and electrification is the big one here, right? And we know that the demand for copper in particular is very much linked to the electrification story. And I think this is why I'm always mindful. Yes, history is a good guide, but the logic and the narrative is a very different one, and probably will be looked at differently in that context, because you're looking at mining companies and the assets they own differently in the context of a very changed demand pattern compared to 10 years ago.
So copper's not what it was then?
No, in a way, because if you consider the demand, and we have all those studies pointing towards the incredible demand that will arise for these metals, it is a different story.
Can I, just before Kriti wraps this up, is Anglo attractive because it's listed in London and therefore trades at a discount?
No. It's attractive because of its assets and the potential you have in using these in a context where there's massive demand for.
Okay.
All right. Sonia Loud. No, it's okay. It's an important question. CIO of Legal and General Investment Management, we thank you so much for that crucial context. It's a really interesting dynamic as we talk about the deal flow in the mining space, not just for Anglo American and BHP, but is this, to your point, a one-off or a sector-broad story?
Everybody's going to want copper. That seems to be the narrative. That's what Sonia's saying as well.
Yeah.
It's going to be... It's where do you get it? Do you have to dig it out of the ground? That's hard. Or do you go and buy it on the stock market?
Yeah,
that's easier.
Antofagasta, another stock that was trading higher this morning. There's another sort of read across from this M&A story. There are other macro themes, aren't there? There's what's going on in Japan as well, also in focus. Coming up, plenty of focus on the weak yen. We're back through 155 again, folks, as we look ahead to tomorrow's Bank of Japan decision. The expectation is we don't get any change in rates from the Bank of Japan, although some analysts pointing out that would be something that might support the currency if they are very concerned about that. A lot of verbal intervention still, but will we actually see some intervention once again from the central bank, from the Ministry of Finance? We'll get to that Japanese conversation shortly. This is Bloomberg.
Welcome back. 30 minutes into the equity day here in Europe. We are facing something of a signal-to-noise challenge this morning. So many corporate results. How do we digest them all? To be honest, equity markets aren't going anywhere in a hurry. We are down broadly across Europe, with the exception of the FTSE 100, which seems to be doing a little bit better. Interestingly enough, the IBEX is actually positive this morning. I think that's probably got to do with Sabadell, and less maybe to do with what we're seeing in terms of the politics. There's some big names out there that you want to be watching in terms of the numbers that we've seen, though, so far this morning. Broadly, actually, though, you would probably say that the net story is quite positive. Some of this is M&A, so Anglo's up by 10%. You've got AstraZeneca on the back of its numbers. We saw the CFO on our set a little bit earlier on. Broad brush story there. Unilever's having a good day. Barclays is having a good day. It's interesting to see what is happening with the chip space, though, on the right-hand side of your screen. The banks are doing okay. The pharma space is doing it's more mixed, but the chip space, the tech sector today, is where the weakness, Anna, is coming through on both sides of the Atlantic. The Nasdaq is kind of pitched to be quite a lot lower this morning.
Yeah, absolutely. So looking to pick up on that theme stateside later on today, Nasdaq futures down by 1.25%. One of the big macro things we are also watching closely this week, and this time tomorrow we'll have the answers to the questions we're about to ask, is all around the BOJ and Japanese response to weak currency. Japanese stocks are lower today, with the yen extending losses in the lead up to tomorrow's BOJ decision. This after the currency weakened beyond 155 per dollar for the first time in more than 3 decades. It happened yesterday, it keeps happening this morning, keeps getting weaker. I think this is the first time since 1990 we've been to these 155 levels. Let's get to you, Bamba, who joins us now, head of active investments for Japan at BlackRock. So very nice to have you with us. Let me ask you about what you're expecting then in terms of intervention. If we deal with that first, hard to maybe have a conversation in isolation about intervention without thinking about what the BOJ does in its meeting. But what are your thoughts on what will trigger intervention this time around?
Yeah, nice to be here. What will trigger intervention this time around? I do think you take the intervention question separately from the BOJ. What the BOJ does is going to be separate from any one-time intervention that the government may or may not decide to do. We don't have particular insights on whether or not the government will do intervention. We think it's entirely possible, but I do think it's important to separate that from what the BOJ is going to focus on doing tomorrow and in their monetary policy decisions, which is to support the Japanese economy and to make sure that the exit from deflation sustains itself. So we think that that's the focus of the BOJ and not so much the currency.
Does supporting the Japanese economy, does that rely on, supporting the economy, does it rely on supporting the currency? Is the yen weakness so weak that, maybe we consider a surprise hike from the BOJ, for example, tomorrow? That would be one way to support the currency.
Yeah, no, absolutely. I think supporting the Japanese economy is going to entail primarily maintaining accommodative monetary policy conditions. So the BOJ, we know, is on a path towards normalizing interest rates or monetary policy. They had the mid-big meeting back in March to pull out of a lot of the extraordinary policies that they put in place, like negative interest rates and yield curve control, and they're on a path towards normalizing things. But they just want to make sure that they're doing that in a gradual fashion and not rush into things to tighten monetary conditions too much, to slow down this the momentum that we're seeing in the economy. And I think that that's their first priority, and addressing the situation on the FX market is at best secondary.
Who's in control of what is happening with the yen right now? Is it the BOJ, the Ministry of Finance, or is it the Federal Reserve in the United States?
Yeah, that's a great question. I think that the yen, the FX, ultimately is going to be driven by interest rate differentials. The government can come in and do intervention, and that'll move the market, for a little while. But that's not really going to be the determinant of FX. So longer term, as the Bank of Japan normalizes interest rates and interest rates go up in Japan, and as the Fed hopefully at some point starts to cut interest rates, the interest rate differential will start to normalize, and with that, the FX should begin to stabilize in turn.
Which is the most important cross rate that we should look at for the Japanese economy? We always focus on dollar yen, but is it dollar yuan? Is that the key thing that we should be watching here? And we should think about how the Chinese are watching what is happening here too. Is it what's happening with Korea? How do I think about this globally and regionally, and the effects that these various kind of cross rates have in terms of the overall basket?
Yeah, I think dollar yen is the right one to look at and to focus on from a fundamental perspective. The majority of the trade that happens in Japan is going to be denominated or keyed off of the dollar. So fundamentally, that is the right pair to look at. And also from a markets perspective, it's absolutely the dollar yen that gets the attention of markets and controls sentiment. So yeah, I think we just look at dollar yen, and that's the appropriate one to look at.
You said that for the BOJ, the currency should be a secondary consideration. They shouldn't want to tighten conditions too much to prematurely slow down the economy. What are you... in terms of what does trigger any intervention then, if we go back to that conversation, it won't be a level. They like to say it's not about the level, it's maybe about the speed of change. So what do you think would trigger intervention?
Yeah, it's the level, it's the speed of change, it's the buildup of speculative positions. I think, from a level and a speed of change perspective, we may already be at areas that justify or that motivates the government to come in and intervene. So I think it's entirely possible. And then also I would add that alarms, feeling of alarm and anxiety over the effects is starting to mount gradually within Japan as well, impacts to cost of living and so on and so forth. So it wouldn't be a surprise at all to us if the government chooses to come in and intervene. But, again, I don't think that that's necessarily what the Bank of Japan is focused on right now. The Bank of Japan is focused on the economy and the fact that they implemented some big changes to monetary policy at last meeting, and the fact that that was taken, quite well by the markets. There were no major disruptions or, liquidity events or vol events in the markets. So they must be pleased about that. And they must also be pleased about the progress in wage growth and, the momentum within the domestic economy. And so I think that's what they see, and that's what they're focused on. That calls for, gradual normalization of monetary policy, of interest rate hikes, which is positive. It's positive for savers. It's positive for the financial economy. So I think that's where most of the focus will be.
And if you were going to intervene, when would you do it? We've got key data out of the United States. So we've got, GDP data, PCE data. These all threaten to move dollar-yen, could move them in a direction that weakens the currency even further. And, of course, we have the BOJ. What would be the thinking about when that intervention would take place?
Yeah, I'm not necessarily in the heads of, the government officials that make these decisions. I think they just obviously want to do it when it's most effective, and they can do it over, a number of times as well. It's not a one and done thing. Yeah, I mean, and again, I don't think it needs to be tied at all around the BOJ event. So I would, sort of separate the two.
Yeah, how much political pressure is there for a stronger currency? We were talking to an analyst the other day who was kind of joking how cheap a beer is in Tokyo versus a beer in Mayfair here in London. And there does seem to be the sense that you see a lot of foreigners turning up in Japan, spending a lot of money, and the local community, there's a certain amount of resentment around this. Is there pressure, domestic pressure, to have a stronger currency at this point? How strong do you think that pressure is? I'm trying to understand, as you say, the motivation to generate that intervention.
Yeah, I don't necessarily think that there's a ton of resentment in the tourism that we're getting. We think it's great. Hotel prices have gone up and restaurant prices have gone up as a result of tourists. But I think, like the general mood in Japan is quite positive. It's quite positive about, the stock market doing so well. It's quite positive about wage growth being so strong. It's quite positive about capex being at all-time highs. Just generally the exit from deflation has been a big positive for sentiment. So I think that generally we're feeling good about things, and we are feeling hopeful about where things are headed. Is there some political pressure about around the currency? Yeah, there may be some, and I think we would all like, the government as well as the private sector would like to see the yen stabilize and be a little bit stronger. But I don't think that should sort of take away from all the positives that are going on in Japan, and that's more of the dominant theme in the business community as well as, at government, I think.
Yi, Great to catch up. We're going to wait. We're going to watch. Next 24 hours are going to be absolutely fascinating. Guy Bamba, head of active investments for Japan, joining us from BlackRock. Coming up, we're going to get back to that big mining story. BHP making that unsolicited takeover bid to rival Anglo American. We're going to discuss what could be the biggest shakeup in the mining industry in over a decade. It's a big deal. Will it happen? That's next. This is Bloomberg.
Welcome back. This is Markets Today. 8:44 in London, so 44 minutes into a European equity market session that sets London apart to some degree. The FTSE 100 up by 0.5%. A lot of the earnings stories and some of the M&A news playing in London's favour this morning. Elsewhere, we have some weakness on the CAC and the DAX. Both of those are down. Now, the world's largest mining company, talking of M&A, BHP, has made a takeover approach for rival Anglo American. Anglo American confirmed the proposal after Bloomberg first reported that the bid was in the works. If successful, the takeover would represent the first mega deal among the world's biggest miners in over a decade. Let's get more on this story now. Bloomberg Senior Executive Editor for Energy and Commodities, Will Kennedy, joins us now. Will, thanks so much for joining us. We've talked quite a bit about why this deal is happening and why now. We spoke to Sonia Loud over at LGIM earlier on, and she was saying this isn't because it's London, it's not because it's cheap, this is because of energy transition and the copper assets. Is that the driving force here?
I think that's right. Everyone would like to get their hands on more copper, and BHP are among the companies that would like to do this. If they got this deal done, and it's a complicated deal with many hurdles, but if they got it done, they would control about 10% of the global copper supply and be the biggest supplier, and that positions them very well for a world in which the expectation is the electrification of everything, all those wires and cables that we're going to need, all those electric cars, means that copper demand is going to keep rising at a time when supply is likely to remain constrained.
Well, you say it's complicated. I think you're being polite. There is a significant South African problem that is built into this. Amplats is one part of it. The unions in South Africa are another part of it. The pension fund's another part of it. The government's another part of it. This is a complicated deal. Is that why the premium is maybe as low as it is?
Yes, I mean, I think that people have always seen that Anglo's copper assets are an attractive target, but the reason that it's never happened is because of the complicated structure of Anglo and the rather hodgepodge nature of its assets. You mentioned South Africa, that's the really key one, and it's important to note that BHP have made a divestment of its South African platinum and iron ore businesses a condition of this deal proceeding. Now, the biggest shareholder is the Public Investment Corporation of South Africa, a state investment firm. They will be very protective of South Africa's interests in any deal. And another complicated factor is De Beers, the diamond business, which is probably not key for BHP, but is also partly controlled by the state of Botswana. So there are lots of hurdles. The final one I would mention is antitrust. Now, China has in the past intervened in mining deals. They buy half the world's copper, so are very interested in the map of the global copper industry, and they will probably think that this would give BHP too much control. So there is a South African angle, but there's also an antitrust angle that we need to be aware of here as well.
OK, so a couple of reasons why this could be complicated. Well, what about other bidders? Do those factors just put off others? Would it make more sense for others to take on this asset, given that BHP's offer seems to be conditional on selling lots of things?
Well, I think that other bidders would have the same problems with Anglo American that BHP have, but there's no doubt that Anglo American's copper business centered on some world-class assets in Chile would also be of interest to Rio Tinto and perhaps even Glencore, although Glencore has its own deal going on with its bid for some of Teck's assets. Now, again, that would be difficult. But once Anglo is in play, I think it is going to set off a bit of a frenzy within the industry about how it ultimately shakes out and what the shape of the industry is going to be from here.
Thanks, Will. Thanks for the update. Bloomberg Senior Executive Editor for Energy and Commodities on hand for us at just the right moment to talk us through the BHP approach for Anglo American. So certainly M&A is something we're watching today. A host of earnings stories as well. Here's what else we're watching. 12 p.m. UK time, Ukraine and Turkey have rate decisions. 1:30 p.m. London time, US GDP and first quarter for the first quarter, we'll also get jobless claims. We have an international auto show taking place in Beijing, so keep an eye on the auto sector with that in mind. Anthony Blinken is also in China. We have BP and Caring AGMs. Those could show some shareholder activity. And later we get earnings from the likes of Microsoft, Alphabet, Airbus and Intel. So quite a big tech representation. Also the aviation themes. We're going to talk tech in a moment, but aviation also on the list for today.
Anna, yeah, I'm going to be... Anna points to me, kind of, basically.
I said airline.
She basically kind of points to me and goes, plane spotter, you go now. Yeah, I'm going to be talking to Guillaume Faury a little bit later on, which will be interesting. So, in the light of the Boeing numbers yesterday, obviously we need to see what we're going to see from Airbus in the context of that. But Airbus, I think, is interesting in as much as it doesn't have the same challenges maybe that Boeing does right now, but it does have its own challenges, and the supply chain remains really... a key area. How far can they ramp up? They've got all this demand that they're seeing at the moment, but they're struggling to ramp up. They've got a Pratt & Whitney engine issue on the 320 platform, which they've got to deal with as well. So it's really interesting that everybody's struggling at the moment to meet the demand that is out there at the moment. I was talking to Michael O'Leary yesterday. He is capacity constrained right now. We're going to see higher airfares this summer because there aren't enough airplanes.
And so the Boeing travails, they matter to Boeing customers. They even matter to non-Boeing customers as well, don't they? As we've discussed with other airlines around Europe. Because if the whole industry is then just affected by a lack of Boeing planes, then that has a knock-on impact on the availability of others over at Airbus. Tech then very much in focus. We talked a little about the Meta numbers. Let's do that in a bit more detail. We've had tech earnings coming through from Meta in particular. A host of reasons as to why this stock really tanked after hours. Let's get more then on these tech earnings with Bloomberg's Alex Webb, who's with us this morning. Alex, I've seen three reasons cited. The sales guidance for the second quarter underwhelming, CapEx went higher, spending on the metaverse going higher. All of these three added up to a real sell-off in Meta. Do you think that was overdone?
Well, I think it's pretty clear that if you say that you're going to be spending more money and your revenue is going to be lower, investors are probably going to not take that very well. And don't forget, the stock has really been bid up quite a bit this year. It's made Mark Zuckerberg, I think, second or third richest person in the world, again, as a consequence. But the key thing here is that there is less appetite for long duration stocks right now. And essentially, the message here was, well, this is actually slightly longer duration than you thought. We are pushing out some earnings because we expect AI to deliver in a few years' time. In the current higher interest rate environment, investors are more willing to go, well, in fact, then we don't necessarily need you as much as we thought we did.
So the year of savings, the year of economy is firmly over. Does Meta just struggle with the idea of saving money and not kind of splurging money on the next big shiny thing? Is that the takeaway as well here?
I mean, it's very hard not to be tempted as Facebook management when you've got something like $50 billion in free cash flow to go, well, I'd like to spend some of that money. The thing will be fascinating this year is when they had the prior expansion into reality labs, they call it the metaverse, there was an over-expansion that you really saw average revenue per employee fall significantly. They corrected that to a large extent last year. It was really tough on all the people they had hired, of course, that they had essentially overhired. Now, if they're expanding into this new space now, it'll be a real test of management to see whether they can do so efficiently. Because, sometimes you do need to add headcount. The question is getting it right, making sure you don't add too much headcount given what your needs might be.
Tell us what benefit AI brings to a business like Meta then, Alex. I was reading a nice opinion piece earlier on today by one of our colleagues, Dave Lee, who was suggesting that sometimes, it's not entirely clear what these big tech businesses should be best doing with some of this AI technology.
Yeah, I mean, look, AI is a very, very broad church in terms of what the technology means. And Of course, Meta has been using AI for a very long time in its advertising business, and it has been progressing some of that recently, adding new AI-led advertising features. It also has Lambda, its large language model. Increasingly, some of these companies are seeing large language models as gateways, essentially new platforms, new ways of accessing the internet, so that your future use of the internet becomes a conversation with a chatbot of sorts that then directs you towards the things you need to go to. Facebook clearly wants to be part of that game, and that also then provides an opportunity for licensing, whether you can license that technology elsewhere. Now, it seems very clear Facebook is playing in the first space, it's playing in the advertising space. There is a suspicion that it really wants to play in that second space. What happens in the third one, essentially remains to be seen, but it's partly about ensuring that you are well placed to capitalize on any opportunities that might come.
Are Microsoft and Alphabet, if they outperform, going to be enough to compensate for Tesla and Meta?
I think probably yes. This is what we saw in the last earnings cycle, was that we had quite often people tend to think of these sort of Magnificent Seven, the tech stocks, whatever you want to call them, as a sort of a monolith. They're not. They're all very different companies. We saw last time around Facebook did pretty well. Google didn't do very well. And actually, we didn't see sort of a catastrophic fallout in the broader market because there was a mixed picture. So, Microsoft and Google, they have far bigger market capitalizations than those other two companies. So you would expect then that if they do well, if they outperform or they meet expectations, then it should be enough to assuage any concerns with Facebook. The big challenge really is going to be Apple, looking a bit further ahead, given the challenges that they are facing in China.
Alex, thanks so much. Bloomberg's Alex Webb joining us with the latest on Meta and the wider tech space. This really stood out to me in this piece from Bloomberg Opinion Guy. This was all about, what do these apps exactly do with AI?
Yep.
And one of our authors saying that when he was searching for an old message on WhatsApp, the AI asked whether he would like to take a moment to generate a humorous illustration of a cat. He didn't. So he skipped that step. I mean, if that's where we are on the AI journey, there's a long way to go.
Yes, that doesn't feel like it's productivity. In fact, it feels like that's anti-productivity.
Exactly.
Taking us in the wrong direction. So we come to the end of the show. We started the show asking the question, kind of, where's the signal in the noise this morning? We've got an awful lot of noise. Where is the signal this morning? And I'm still trying to work that one out. My kind of takeaway this morning is that actually FTSE 100 stocks are doing relatively well here.
Yeah.
And maybe this catch-up story on the FTSE 100 maybe therefore has a little bit of momentum this morning. Astra's up, Unilever's up, Anglo's up on its own kind of story, kind of whatever it's doing. The oil stocks are doing relatively well as well. So there's an interesting kind of FTSE outperformance narrative, which I think is worth maybe looking at.
There is, absolutely, up by 0.4% on the FTSE, as the stock 600 is down by 0.3%. And some of those are UK specific a little. I mean, you could say that about some of the Barclays numbers, but there is a global story around Barclays, and there's certainly a global story around the other names that you mentioned. So that's interesting to note. I think it is apt that we actually ended on that conversation about tech, though, because although we've been distracted rightly by all these European earnings, if we look ahead to the US session that's still ahead of us, NASDAQ futures down by 1.1%, and that is the Meta story, and that is the concern around AI this earnings season.
And we're building up to the Fed. That's going to be a big story as well. The earnings are going to continue. The noise will certainly be with you throughout the rest of the day, but we're going to cut through it. Norsk Hydro CEO is going to be joining us a little later on. I'm going to be speaking to the Airbus CEO. Looking forward to all of that. That wraps things up from us. It's been a busy morning. I hope you've taken some signal away from the noise. Francine is going to carry on the conversation next. The Pulse is up next. This is Bloomberg.